Hi, everybody. Chris Englebert with Englebert Financial Advisors in Allentown, Pennsylvania. And it is July 2026, time for the first of the month update. By the time you see this video, we'll have all celebrated July 4th. And I don't know about you guys, but it was spectacular. The 250th anniversary of our country. Words can't describe the fireworks, the outpouring of emotion, what everybody was doing, what they saw. I'll remember it for a long time. Well, let's dive into what's been happening in the investment markets. And for the month of June, the S&P 500 actually experienced a pullback. No surprise, because obviously we had a really good April and May. So June, we had a pullback, mostly led by the semiconductor stocks, which had been on a huge tear. Some of these semiconductor stocks have gone straight up, literally vertical. We talked about that last month. And so they took a breather. We'll see if this is the pause that refreshes or something else that's happening out there. But really, the big news for the month was the decline in the price of oil. We saw oil sell off sharply, literally to the lowest level since the start of the war at $70 a barrel. This is a tremendous decline from obviously what we had happened a couple of short months ago. Now, why is the price of oil declining so important? It's because just about everything that you use around your house, obviously gasoline in your car, but all the petroleum products that are used throughout our society today are tied to the price of oil. So when oil goes up, fertilizer goes up, food costs go up, manufacturing costs go up, etc. And the price of oil rising forces inflationary pressures to continue higher. Now, we've seen some hot inflation numbers, and I'll talk about that in a minute. But looking forward, with the price of oil declining as sharply as it has, that bodes good news for future inflation out there. So let's talk about interest rates and what we've been seeing. And again, if you've been watching our videos, we've been talking about this. We really thought that this year was going to be a return to normal in the stock market and also the bond market. And what we mean by that in the bond market is that short-term interest rates would be coming down. Lo and behold, because of the inflationary pressures out there with the rise in oil prices at the start of the Iran war, we have seen the Fed hold interest rates right around the 4% level on the short end of the scale. And it doesn't look like they're going to be having interest rates decline anytime soon. That's not all bad, because on the long end of the scale, the 10-year Treasury is averaging right around 4.5%, which we think is a lot of investment value going forward. So again, it looks as though short-term interest rates are going to stay elevated, which isn't a bad thing. But one of the things it does do is it keeps people from making better investment decisions because they're hiding in bank CDs. So we would like to see short-term rates come down, but it looks like it's going to be a fourth quarter or a first quarter of 2027 story, as long as employment numbers hold in, which they seem to have been. We've seen some revisions in the July and 2 previous months, a little bit lower, but again, employment is holding in this time. So let's talk about the scoreboard and where we are for the first 6 months of the year. Obviously, it's all about small mid-cap stocks this year. We've been pounding the table on small mid-cap stocks. Many of our clients are overweighted in this area. We've seen value stocks, i.e., watch what's happening. The Dow Jones Industrial Average is sometimes a proxy for value stocks. Dow Jones has been hitting all-time highs, but you can see that the VOO, or the S&P 500, still respectable at over 7.5% return year to date, is not really the place to have all of your money. Again, one of our theses we started about 18 months ago was that we thought that the stock market would broaden out and that there'd be more asset classes and style classes, i.e., small mid-cap, value, international, that would outperform the S&P 500, and even more so outperform the Magnificent Seven stocks. We all know what those are: Amazon, Apple, Meta, Microsoft, Netflix, Tesla, Nvidia, and Google. And you can see that an ETF representing the Mag 7, MAGS, is actually down for the year. So again, we think that this year, 2026, is a year that it's not a one-trick pony. You just don't hide in the VOO or the Mag 7 and hope to make money. You can see that there are other places that are going to be making money. So again, just to update you and repeat what we said previously, S&P 500 had a negative month of June. I would not be surprised that we are literally in the dog days of summer. Depending upon where you are in the country, here in Eastern Pennsylvania, we had some crazy hot weather over July 4th weekend. So when I say dog days of summer, a lot of people are on vacation, trading volumes dry up, and we could end up seeing the stock market move back and forth in a narrow range between now and the end of August. But the good news is lower oil prices should lead to lower future inflation numbers. We think that that's going to help the Fed decide whether or not they want to lower short-term interest rates in the back half of 2026 or the beginning of 2027. And finally, the Mag 7 is not the place to be this year. You can see obviously what's going on by a previous slide. You do not want to be focused in those large cap technology stocks. Interest rates are nice at 4.5%. They're offering some value, especially tax-free bonds. We actually think interest rates could offer a little bit better return between now and the end of the year. I say interest rates, I say the bond market between now and the end of the year, because we got to see what's going to happen with earnings in the back half of 2026. So far, earnings have been very good this year. Companies have been able to downsize. They've been able to hold margins. But let's see what happens with the consumer for the rest of 2026. As always, if you want to follow along with this slide deck or this video, you can download my app by texting Chris E, CHRISE, to 36260. If you download my app, this content will be on my app. That's all we have for July. August might be coming to you a little bit later, probably around mid-August to the third week in August. People have vacations, including myself. So if you don't see August right around the first of the month, don't panic. It'll probably be coming later in the month of August. That's all we have for July. That's all we have for this month. Thanks for watching. We'll talk to you soon.